Micron just reported one of the most extraordinary quarters we've seen from a semiconductor company in years, guys. Not because they beat earnings and not because they raised guidance, but because they beat the numbers that were already considered aggressive. And guys, I'm going to pull up the chart as we talk about the earnings report because watching this chart in real time is just absolutely nuts. We can see right now that right after the report, and guys, they reported just a few minutes ago, the stock went from around, it broke down into the 900s, right? It was like at 995 or so. Boom, it shot up and now we're trading above 1100, right? They beat the numbers. Goldman Sachs spent the last couple days leading into this report warning investors that expectations had gotten too high. But tonight, Micron effectively responded with a $6 billion revenue beat. And that's why this earning report matters. So the stock is up, roughly, we'll say 5% after hours, right, as I'm recording this. But the move itself is not the story here. The story is what these results tell us about AI infrastructure demand, HBM pricing power, and whether Micron is becoming something very different than the cyclical memory company investors have known for decades. Guys, we're going to walk through the numbers here, the stock reaction, and then three things that matter most that I'm going to be listening for on tonight's conference call. Because the next move in Micron probably will get defined there. So let's start with the headline numbers. Revenue came in at 41.46 billion. Wall Street was looking for 35.59 billion. Think about what that means. This was a huge beat. This wasn't a company slipping past the estimates by a few $100 million. Micron delivered nearly $6 billion more in revenue than analysts expected. And it gets even more impressive when you compare it to the company's own guidance. Management entered the quarter expecting approximately $33.5 billion at the midpoint. And tonight's result came in at almost $8 billion above that level. That is not execution around expectations. That's a business operating at a pace that the market simply failed to model correctly. Then you move to earnings, right? Adjusted EPS came in at $25.11 per share. Consensus was $20.78. I mean, even the most optimistic analysts on the street were barely approaching that number. Micron exceeded expectations on the bottom line by more than 20%. And then we get to the number that may matter more than anything else. Gross margins. Non-GAAP gross margins came in at 84.9%, almost 85%. Now just pause right there for a second, guys. For any company, that's extraordinary. For a memory manufacturer, it's almost difficult to comprehend. Just a quarter ago, gross margin was 75%. And the expansion from 75 to nearly 85% tells us exactly what's happening underneath the surface of the business. HBM pricing power remains incredibly strong. Micron isn't just selling more product. They're selling product at a dramatically better economics. And management isn't signaling a slowdown here. Q4 guidance came in at approximately $50 billion in revenue. That's right against the high end of analyst expectations. And guys, look, the stock is holding the move right now, right? We are holding 1137 right now, and it's 316. The results have only been out for 16 minutes. Okay, and this is the 50 billion number. That's right at the high end of analyst expectations. So EPS guidance landed around $31 a share. Let's put that another way. Micron just guided next quarter to more revenue than most S&P 500 companies generate in an entire year. The only metric that came in slightly below expectations was capital expenditures. CapEx was 7.1 billion versus estimates around 7.3 billion. But at these margin levels, it's basically just a footnote, which brings us back to Goldman Sachs. The firm's concern heading into earnings was simple. Expectations had become too elevated. Tonight's report answered that concern directly. Goldman Sachs, maybe they just wanted a better deal because they knew they missed it. But the expectations weren't too high. The business was simply stronger than anyone anticipated. So now let's talk about the reaction, right? I've got the chart pulled up so we can talk about the reaction here because this is where things get interesting. So despite one of the biggest earning beats you will see all season, Micron's up only 5% after hours and it hasn't yet quite reached its all-time high of 1,245. Okay, so at first glance, maybe it feels underwhelming, but the context matters here, The stock had already fallen more than 13% heading into the report, right? So we were down 1245. We got down all the way down to in the 900s today, right? So that's a little bit of a fall. Even though we're up so high, it was down 13%. And investors spent the last couple weeks de-risking their positions. Like we're kind of whipsawed if you were in Micron. You're up, you were down, right? And they were worried about demand sustainability. The Goldman report, like people want to tear it down. AI spending, right? Our expectations ahead of reality. Did the thing go too far too fast? So what we're seeing after hours here isn't just a reaction to the earnings. And like we're still pushing this green candle up right here, guys. Look at that, right? This is a repricing of a stock that was already discounted before the report arrived. And you can say, guys, we're up to $1,200. How is this discounted? It was discounted. This move takes shares back towards, I mean, shoot, past the morning side. Look, we broke this right here. We broke this swing high, and I got the extended hours turned on. But this mark right here, let me see here, at 1,114, we're above that. We broke above the swing highs. Okay, that is a very bullish signal. So guys, shortly after the release, Evercore chief equity strategist Julian Emanuel appeared on CNBC and made what might be the most important observation of the night. His view was that Micron beat even the bullish case across most major metrics. Not consensus, the bull cases. His takeaway was that these results reinforce the broader AI infrastructure thesis and push back against the growing concerns surrounding supply constraints. But the more interesting point came from how investors are positioning. So according to Emanuel, the market increasingly wants exposure to the recipients of AI spending rather than the companies funding it. In other words, investors want the companies collecting the checks, not necessarily the hyperscalers writing them. That's an important distinction here. Because if that rotation continues through the second half of 2026, Micron sits directly in the path of those capital flows. So guys, the headline numbers here are impressive and the stock is still reacting good. I mean, before we close here, let's just pull up AMD, see if anything is moving in sympathy with Micron. Not really. Oh wait, yes it is. Some bitch. Yeah, I mean, look, Micron jumped a bunch. Right, Micron went from, looked like it was down here around 506. Now we're up at 520. So some of these other names are moving in sympathy with Micron in their report. But back to the earnings report, guys. The headline numbers definitely impressive. But I don't think this is the most important part of the release. The most important part is a sentence that many investors probably skipped. The CEO of Micron specifically highlighted a new multi-year strategic customer agreements, 3 to 5 year agreements, and management stated those agreements will, quote, significantly enhance the durability and predictability of Micron's financial performance. That's very deliberate language. Companies don't describe cyclical demand the way they describe structural demand that way. I'm going to pull back up Micron so we can watch. Sorry guys, I'm doing this in real time here. Toggling back and forth, watching it. Yeah, look at that candle. It's still going. It is still ripping higher. This thing looks awesome. So guys, anyway, back to the CEO, right? Management is effectively telling investors, right? They're telling us that this just isn't another memory cycle. They're signaling longer term visibility. And that's exactly why the conference call tonight matters so much. Because the obvious questions now become, who are these customers? What are the contract terms? How much of future HBM production is already spoken for? How much of 2027 capacity has already been committed? Those questions are potentially more important than the Q3 result themselves, and they are likely to emerge during the analyst Q&A later tonight in the conference call, which I will be covering. I'll be watching it, and I'll hopefully get to record my reaction and post that video either tonight or early tomorrow morning. So guys, as this conference call unfolds later, there are 3 areas that matter most. Write these down, okay? First, the multi-year agreement details. Management flagged these agreements for a reason. They think they're important. And analysts are going to press hard for specifics, right? So if they confirm that a substantial portion of 2027 HBM production is already contracted, that creates a very different valuation framework for the stock. At that point, investors aren't modeling quarters. They're modeling out years. And second, gross margin sustainability. Q3 gross margin came in at 84.9%, which is astonishing. Q4 guidance suggests continued strength. So the key question we need to look for is whether management views these levels as temporary or sustainable. If pricing power remains intact into 2027, the margin story has another leg higher. And that's where earnings estimates start to move again. And third, guys, the NAND and the traditional memory business. Because HBM is driving the narrative, but Micron is still exposed to broader memory markets. Let's see here, guys. We're at now 11.55 right now. We jumped another 20 bucks, right? So we're talking about DRAM, NAND, smartphones, PCs, consumer electronics. If management starts sounding cautious around those businesses, that's where the Goldman thesis begins to re-enter the conversation. Not immediately, but gradually. And that is the risk that investors are going to be listening for tonight on the call. So guys, in closing here, coming into earnings, the setup was straightforward. Goldman was cautious, investors were nervous, the stock had already sold off more than 13%. But tonight, Micron responded with one of the strongest quarters in company history. Revenue didn't just beat, it cleared even the whisper numbers. Gross margin didn't just hold, it exploded higher. And guidance didn't disappoint. It landed near the top of the street's range. The bull case showed up to the party tonight, guys. And now the conference call determines whether it extends or we see a pullback, right? Just as fast as this thing is going up, if management says something that sounds off, we could come back down, right? It doesn't look like it's going to happen. Look at that green candle, guys. We are now up at 1170, right? We just went up another 20 bucks. Guys, the next phase of this story isn't about what they earned in Q3. That's in the books. It's about how much visibility management gives us into 2027. Guys, as soon as the conference call transcript drops, I'll be breaking down everything that he says about the agreements, HBM demand, and long-term supply commitments. So guys, make sure you hit like and hit subscribe if you don't want to miss that recap of the conference call, because that's where the real trade setup lives. Also, after the conference call, I'll be doing an option trade setup. I don't really want to give us a trade right now because we're after hours. We can't trade options. And the conference call could definitely move this stock. Again, guys, this video is for educational and informational purposes only. It does not constitute financial advice. Option trading involves significant risk and is not suitable for all investors. Always do your own research. Consult licensed before trading. This is Luke with the OptionBomb. Make sure you hit like, hit subscribe if you want to see my reaction and how I break down Micron's conference call later tonight. I'll see you in the next one.